Hello, and welcome to myfinanceteacher.org. Have you noticed that over the last 9 months or so, a lot of the markets are going crazy? They keep ratcheting, they keep rallying higher and higher. For example, let's have a look at a few of these markets. S&P 500 in front of you. Since late March, rallied from around 2,200 to nearly 3,800. Bitcoin since late March rallied all the way from just around, say, $5,000 to 37,000 at the moment. Gold rallied from around $1,500, let's say, peaked over $2,000, and at the moment is just around $1,900. Crude oil went from, say, practically zero to over $51 at the moment, even though there is a lot of places under lockdown. Copper futures, I've been waiting for copper futures to cool down a little bit, but copper has been ratcheting up all the way since late March from under $2 to currently over $3.6. Corn has been going crazy over the last month or so, and since late April it's already rallied from just around $300 to at the moment somewhere around $500. I was actually expecting corn to cool down a little bit into the end of its ongoing cycle, but with this crazy rally over the last month or so, I'll have to ponder about corn a little bit to form my expectation of what might happen. I don't report much on corn, but I do keep an eye on it, and I would report on it when I see an opportunity to enter. Basically, my point is a lot of the markets, many of the markets that you might look at, have been rallying like crazy, and my thesis on that, I think a lot of you might agree, is that the reason for that is because dollar has actually lost a lot of value in the same period of time. If you look at this late March top, which was just around 103 on the dollar index, there is a huge drop within the couple of intermediate cycles all the way down to around 89 at the moment. And additionally, if you look at money supply, it's increased substantially just within this year. To put it into perspective, for example, since, let's say, the end of 2009, since that global financial crisis, the money supply has increased by around 82-85% in the last 10 years until the end of 2019. So that's on average, say, something like 8% increase in M2 money supply per year. While in 2020, money supply has actually increased by something like 23-24% in 1 year, dropping the value of the dollar quite a lot within that same year, and of course increasing the nominal price of all of those assets as dollars become less and less valuable. So what I'm wondering right at the moment is whether the market has kind of realized that inflation, especially high inflation, is pretty likely, and the market is investing in whatever it can invest to basically try to avoid some inflation. Look at this corn chart. Just since the beginning of December, it already rallied from around $422 to nearly $500. In the same time, gold has also done pretty well, rallying from under 1800 to over 1900 in less than a couple of months. And just forget about looking at Bitcoin. The Bitcoin's gains are really outstanding. Actually, as members at myfinanceteacher.org know, we did have really nice entry into Bitcoin somewhere around the price of $11,000. You can see that if you join the membership and check out this fictitious portfolio over here. And since then, as I didn't actually expect Bitcoin to shoot up to $37,000, we've actually been decreasing our position size substantially at really amazing profits. But of course, now in the hindsight, it would have been better to stay put until this price level of $37,000. So what I'm pondering about is everything, including, say, for example, the general stock market, about to enter into this more crazy rally as everybody is starting to expect some sort of high inflation? Or are we still within regular markets and a substantial correction, substantial cool down is to be experienced after these dizzying rallies that we've been observing over the last several months? On this question, I am truly interested in your opinion, so let me know what you think in the comments below. So the main question is the dollar going to drop indefinitely, creating this indefinite rally in all of the hard assets? Is the Democratic government in the US over the next several years is going to increase money supply more substantially than it has been increasing over the last, say, 10 to 12 years? Or do we have a chance to return to some sort of regular, familiar markets? Generally, my opinion is that even though over the next, say, 1 or 2 years, the increase in money supply is possibly going to slow down as the health concerns alleviate a little bit and the lockdowns finish, I don't think we will continue to see annual money supply increases of over 22%. But as it takes time for newly printed money to circulate down into the economy, I think we are still going to experience some inflationary pressures over the next, let's say, couple of years. And that might actually be very, very positive for gold prices to reach those interesting targets over $3,000 that I've mentioned in some of my previous videos. By the way, why not subscribe to the channel and check them out? Talking about the money supply of dollar, let's have a look at the value of dollar, because there is a chance that we will see some sort of a bounce possibly over the next several days, maybe over the next couple of weeks. And the reasons for that are as follows. Firstly, the duration of the cycle. Generally, shorter-term daily cycles in the US dollar lasted for an average of 59 days. That's over the last couple of years, since at least the middle of 2018. The current cycle, I think it's going on for 78 days, although there is a chance that the cycle did actually finish in the middle of December, lasting for 57 days, as we've seen a rally over several days, possibly indicating a new short-term daily cycle. But in my opinion, that rally was not really strong enough to give us a new cycle. Meaning that we have a dollar cycle, short-term daily cycle lasting for 78 days at the moment. It's not extremely unusual. Back in the middle of 2020, we saw a cycle lasting for 83 days. And what we see is a positive divergence on RSI. Lower levels on the price chart combined with actually higher lows on RSI. Positive divergence often precedes some sort of a bounce. And those are already a couple of reasons why I think some sort of a bounce is likely in dollar over the next several days, maybe up to a couple of weeks. And there is also another reason as well. Zooming out a little bit, you will see that back in early 2018, there has been a long-term bottom in the US dollar value, anywhere between 88 to 88.8. So there is a very strong support zone around 88 or just above that for the US dollar. And if the dollar continues to slide down over the next few days, maybe 1 or 2 weeks, I think there will be a noticeable bounce from that support zone. Now moving on to other markets, perhaps that bounce in the US dollar over the next 1 or 2 weeks might actually finally give us a correction in a lot of the markets. A correction that I've been looking for, to be honest. Looking at S&P 500 at the moment, the ongoing short-term daily cycle, well, I think there is a good chance the cycle is still ongoing at 68 days long. Usually these cycles in the S&P 500 last anywhere between 2 to 2.5 months. And when we saw this big red candle a few days ago, I thought there was a chance for S&P to finally correct at least down into the 50-day moving average, which didn't really happen. And if S&P just continues higher and higher and higher from here without a noticeable correction, you might have to say that the previous daily cycle did finish over here on the 4th of January. But as the Bollinger Bands are narrowing, which usually comes before some sort of a violent move, I think this violent move is, after all, more likely to the downside. Although the intermediate cycle after a short-term correction will likely continue higher, as the intermediate cycle is just past its midpoint. Usually these cycles last for just over half a year. So I think there is another push in the intermediate cycle higher as health concerns improve a little bit, lockdowns possibly finish, traveling becomes a little bit easier, and possibly more money printing coming from the government. As you see over here, optimism index on the general stock market on S&P 500 is pretty high, and we see some negative divergence on optimism as well. As S&P 500 continues slowly higher, optimism is cooling down a little bit, but it's still high, and a short blip down into the daily cycle low will help to reduce your investment risks into the top of the intermediate cycle into the next short-term daily cycle. Continuing with cryptocurrencies, Bitcoin, of course, has done amazingly well, and you probably have heard about that already. But to be honest, I didn't really expect Bitcoin to break $20,000 so soon. And with such performance, it's sometimes difficult to say when the cycle peaks and when are we going to enter into that declining phase. For example, back in October and November, the 14-day RSI has stayed embedded into overbought area for nearly 6 weeks, while Bitcoin just continued climbing higher. And even at that time, it was kind of hard to identify this cycle low, which only came down to just below its 20-day moving average and didn't really retest the 50-day moving average. Although a little bit later over here in early December, Bitcoin did come a little closer to that 50-day moving average. Looking at history though, usually in most of these 2-month cycle lows in Bitcoin, the price does come a little bit below that 50-day moving average, which helps you to identify those cycle lows, which generally present a nice entry opportunity. So RSI has already been into overbought area for a couple of weeks, while the price has already poked above the Bollinger Bands multiple times. On the other hand, though, you could say the same thing about Bitcoin back in early November, and after that, Bitcoin still continued higher. After early November, it still pushed from 16,000 all the way up to 19,000 before cooling off briefly into that 2-month cycle low. So is Bitcoin going to continue higher despite overbought levels and despite multiple pokes above the wide Bollinger Bands? I would say that the round number of $40,000 is probably very magnetic at the moment, but the cycle is already past its usual midpoint. It's 42 days old. Usually these cycles in Bitcoin last for a couple of months. So possibly sometime by late January, I would expect some sort of a correction. And given how strong the pump has been over the last several weeks, possibly the correction is also going to be significant. Having not really tested the 50-day moving average in the previous cycle low, possibly this time in the next several weeks, Bitcoin might actually test that 50-day moving average. So on one hand, I am looking forward for an opportunity to increase my allocation to Bitcoin and possibly other cryptocurrencies. On the other hand, we've been quite successful at myfinancesteacher.org to enter at around 11,000 or slightly above that a few months ago, and we've been gradually taking profits ever since. Next, moving on to gold. Gold has finished its previous intermediate cycle back at the very end of November, and these cycles in gold usually last for around half a year, although this previous cycle was unusually long, lasting for 255 days. Luckily, we've done really well at myfinancesteacher.org at the beginning of that previous intermediate cycle when gold rallied past $2,000, and we have already accumulated our positions since October and into November. So what's happening at the moment is gold is in an ongoing short-term daily cycle as well as the intermediate cycle. Both are only 38 days old. As I mentioned in some of my recent videos, I did expect some sort of a cool down in gold, possibly over the next 2 to 3 weeks into the end of the short-term daily cycle. And we saw a big red candle on gold yesterday with the top of the candle nearly touching that resistance zone, both from November highs as well as from the September highs. So in the short term, as dollar possibly continues down for just another several days, gold still might come to poke again through the upper range of the Bollinger Bands once more before going down into that short-term daily cycle low. These cycles in gold usually last for anywhere between 1.5 to 2.5 months. So once the cycle finishes, I do expect gold to continue higher into the continuation of the rallying stage of the ongoing intermediate cycle, which is still pretty young at only 38 days, and we possibly have another couple of months into the midpoint. Now moving on to crude oil, we do hold some positions at My Finance Teacher in energy, and over the last couple of weeks we have actually reduced those positions after having a really nice profit since late October. And after reducing those positions, I'm now still waiting for a nice entry opportunity on crude oil. But amazingly, crude oil is still above $50. Potentially, if we have a red candle, say tomorrow or over the next couple of days, you might see a negative divergence over here when price shows you a higher high while RSI actually shows you a lower high. Again, negative divergence often precedes some sort of a cool down, so that might be the time when I add back to my energy related positions. But again, for more details, just join us at myfinancesteacher.org. You can do that by clicking this register button. The first month is only $5 and it's $10 per month after that. Moving on to copper. Copper, as I've noticed, correlates very well with the general stock market. This blue line over here is S&P 500. This is a weekly chart. And at least over the last several years, since at least early 2012, on average, these copper cycles lasted for about 32 weeks. The previous cycle low came relatively close to the intermediate cycle low in S&P 500. I think something similar is going to happen over the next several weeks. But the ongoing cycle is still pretty young at only 14 weeks, so possibly another several weeks upward as the intermediate cycle in S&P 500 peaks, with something similar happening in copper. And as general stock market declines into the intermediate cycle low, that's when copper will be likely to follow the stock market and give us an interesting entry opportunity for the members at myfinancesteacher.org. Looking at the 14-week RSI, it's already into overbought, and that's a weekly RSI. So copper is quite expensive at the moment, in my opinion. That's for the intermediate term. Over the long term, though, again, as I mentioned, if governments continue to print a lot of money, if dollar value deteriorates in the longer term over the next, say, several years, then I am still very bullish on a range of commodities, including copper. But in the intermediate term, I do want to try to find a better entry opportunity. Next thing I want to have a look at here is coffee. And actually yesterday I was stopped out of my coffee position over here with a big red candle. And looking at the cycles, usually cycles in coffee, at least over the last several years, last for around 145 days on average. The previous cycle lasted for 141 days. The ongoing cycle is already 63 days old. That's kind of relatively close to the midpoint of cycle duration. So although there is still a bit of a chance for an upward momentum before coffee declines into the cycle low, there is also a possibility that coffee has actually topped several days ago and is generally going to go sideways to down over the next several weeks without giving us a higher high. Either of those possibilities are quite likely, again, since the cycle is already 63 days old. So before I see what happens over the next couple of days, I don't really want to re-enter into coffee positions. So that's enough of an overview of a range of markets for this video, but for more details on these and other assets, why not join us at myfinancesteacher.org. For now, I wish you a wonderful day and good luck in your trades.